We've heard a lot about cyber risk and operational resilience in the earlier panels, so it's a very welcome opportunity to go deeper into it with our practitioners. Cybersecurity events continue to increase. We've seen in number, scope, sophistication that they're on the up and up. Some estimate the annual cost of cyber crimes, cyber incidents, to have increased to as much as $6 trillion by 2021, and that's up from just US $400 million in 2015. So a massive jump. We also know that cyber incidents tend to be underreported, so it could actually be worse. The financial sector also, as always, continues to be the most impacted and the most often attacked for obvious reasons. Because of that, we should point out that the regulators and the supervisors and the industry are very sophisticated in how they address cyber incidents, how they protect themselves, how they try to mitigate. But as the probability of an individual firm or the sector being impacted increases, the dialogue, the thinking among the public sector and the industry has changed to where instead of worrying only or especially about how to stop cyber incidents, the thinking is moving more towards just assume you're going to be impacted, what are you going to do about it? So how operational or resilient are you? How cyber resilient are you? How quickly are you going to be back up and running? What are your tolerance limits? Are you able to withstand it for how long? What are the impacts going to be on your firm, on your customers, on your business? So this newer thinking of operational resilience has been really led, especially first by the UK authorities, so by the FCA, by the PRA, and by the Bank of England, of course, who together put out a very important white paper, I think already 2 years ago now. And they've been doing a lot of the leading thinking, and it also touches a lot on what previously was looked at as operational risk or a business continuity. So I would like to start with Nausica Delphas, and welcome, and to ask you, how has your thinking evolved around operational resilience?
Yeah, thank you, Martin. I'm delighted to be here. So operational resilience has been a priority for the FCA for a number of years. It impacts all our statutory objectives: consumer protection, market integrity, and competition in the interest of consumers. And so it's been a matter of focus for us for some time. It's also a factor of the fact that financial services nowadays are so reliant on technology, interconnected, interdependent, and connected with that, at the same time, we also have real-time expectations from customers that can play out in the media and the social media at very quick space of time. So it's a matter of real importance to us as regulators and to the financial services system as a whole. So as you've mentioned, Martin, in the last year or so, we've been working with the Bank of England and the PRA and issued a discussion paper on operational resilience. We've also been working with our counterparts internationally on a number of issues, but I'll focus on the discussion paper. So in short, what we're saying there is that we want the financial system to be able to absorb shocks and not to contribute to them. And whether firms can do this really depends on where they focus their strategy, investment, priorities, and culture. So what is it that we're saying in the discussion paper? Well, first of all, we're saying, as you have mentioned, that we think firms need to assume that disruption will happen. It's not if, but when. And as a result of that, firms need to think about what are their most important services. Not everything has to be protected to the same extent. Yeah. So there's a factor there. And then firms need to think about how can they restore business services. So this isn't just about recovering a system or recovering a process, but it's actually thinking, well, how will this disruption affect our business, and how can we restore that business service effectively? Connected to all of this, we've mentioned that firms need to understand their impact tolerance. And by that we mean, what is the maximum shock that a firm can absorb and recover from? And it's from that base that firms should think about what their investment strategy should be and what their preparedness and recovery mechanisms should be. And connected to recovery is also thinking about communication plans. Very often, the focus has been on systems, processes, etc. But as I've mentioned earlier, how you communicate with customers, with the market as a whole, is really crucial. So it's important for firms to have those communication plans in advance that they can then adapt as necessary. And the final point is the accountability of senior management. So I think it's implicit, really has been for some time, that senior management and boards are responsible for resilience in their firms. But actually, certainly in the UK, we have seen a number of outages, of issues that have affected customers quite significantly. So I think there's more to be done there. In the UK, we have senior manager responsibilities, where we have a senior manager who'd be responsible for technology and so forth. But it's really a matter for the board as a whole and for senior management to really engage with how does their firm remain resilient? What are the decisions that should be made? Where should investment be made? What are the priorities? So that they really own and understand and engage with that, because they are ultimately accountable for for their firm's resilience. So that's how our thinking has been evolving. We very much think that cyber risk and cyber resilience is part of operational resilience as a whole, because when you break it down, the issues, the shock that a firm might face, it could result from an external cyber threat, or it could be an operational outage because an IT system's being updated. But either way, the impact is similar. The capabilities that are needed to restore function are similar around people, processes, technology. So we very much expect and think that this should be considered together. So in short, we think that firms should be thinking about what is their impact tolerance, tracking that, testing it, and then thinking about how they would recover and respond and communicate when things go wrong in the interests of customers and the market as a whole.
Great, thank you. When you mentioned preparedness, looking at the poll just now, I think it said about 65% of the room feel like they're somewhat prepared. Was that surprising for you, Nausicaa? Or?
Well, we've done a survey of firms in the UK, and it is clear that there is more work to do in different areas. And I think actually it's really good for firms to be honest about where they are, because from there you can really progress. So I think it's a positive.
Great, thank you. Beth, turning closer to home, as a supervisor of national banks, thrifts, and also foreign banks here in the U.S., how do you assess and supervise the operational resilience of firms?
Well, first I'd like to thank our friends from the UK for furthering the discussion, because their paper did do that, definitely, domestically as well as internationally. Obviously, we've been looking at this area, this risk sort of topic, in different ways, different manners for decades. We've called it different things. I think we've all gone through the evolution of it. First it was disaster recovery, then it becomes business continuity, and then we layered on the somewhat existential kind of threats that cyber brings to the picture. So then we started saying, well, what is it we've really been wanting to achieve through all of these things anyway? And that's to be a resilient organization. And we've talked about resilience quite often in the financial sense. Have enough capital, have enough liquidity, be financially resilient. Well, what does it mean to be operationally resilient? So we sort of, so we're still on the journey. We're probably in the middle stripe there, if you ask as a regulator. What is it we need to do, and how do we need to continue to evolve our approach to supervising it. You know, we obviously look to say, how is bank management doing their assessments, doing their measurements, being held accountable, what are they putting in place, how are they testing, how are they validating current pieces they have, and what is their strategy to move forward. And we've got a lot of work that's gone on that I think underpins this concept of resiliency. Like I said, the old DR and business continuity, but even some of the resolution and recovery planning activities that went, you can think of some of that sort of inventorying that you did around those can give you some lines of sight on different things you can put in place to make certain bits and pieces resilient, and maybe what are actions you can take, particularly if a given, you know, part of your firm or a function or service of your firm is the one that's attacked. It gives you an idea of how to start thinking of that. So, I mean, those are all the things that we're doing now. We're now collectively thinking about that and looking at it broadly, and then saying, how does it fit into what are they investing? How are they approaching it? What is their strategy to meet this new, bigger concept that the world is just really moving to?
Great. And were you surprised by the poll results?
No.
No?
I wasn't. Yeah, the way you phrased, I must admit, the first session, the first answer of having a robust program, to me, everyone's always going to be working at this because a lot of the potential incidents, events, and vectors can be changing continuously. So that robust program is important to where you're almost always going to be working to put plans in place. It's always going to be an ever-changing, evolving thing, but it really did not surprise me that much.
Great. Debbie, Jamie Dimon last week in his annual letter to shareholders identified cybersecurity, cyber risk as possibly the largest threat to the U.S. financial system, and I would probably argue also internationally. How do you see the industry preparing for this? What is the industry doing, in your opinion, to really improve?
Yeah, no, thank you. And first, actually, before I answer the question, I just want to mention, make an observation that this is one of the most diverse events, panelists, speakers that I've been on. So I just want to thank IIF for what you're doing there, and also the strong work that you've been doing for the global financial sector. But I think, you know, Jamie's comment, that could be any CEO, right? I think cyber has been cited by many CEOs, and also, you know, Treasury, obviously Bank of England, as a systemic risk. Financial Stability Board, you know, has said the same thing. But around operational resilience, you know, as Beth and Noska have said, this is not a new concept, right? We're building on something. Yeah. So I think a lot of the things that firms have been doing remain the same, right? You still want to identify your assets. You want to be able to protect them adequately. You want to be able to detect intrusions when they hit your network, right? And you want your response and recovery functions also to be strong. But in terms of, you know, what's driving some of this new activity around operational resilience is the cyber threat. And I think because of the cyber threat, we need to work more closely together. And also, you know, we need to elevate the conversation to senior levels, to the board, to CEOs, right? This is not an IT issue. This is a real issue that has real financial stability impact. So changing our security culture. This is not just, you know, everyone has the potential to be the weakest link, right? We've seen phishing attacks, social engineering, malware, ransomware, right? So just ensuring that it's not just at the highest levels that people are aware, but also, you know, every employee has this security culture mindset. You know, I think other things that we're doing is looking further down our third-party due diligence, right? And not just third-party due diligence, but you know, fourth party, fifth party, right? Because the system is so interconnected. And then, you know, I think what the Bank of England discussion paper does so well is we're not just looking at IT system failure, we're now shifting our mindset and we want to continue business services. So there, if X critical system goes down, what are some other substitutability solutions that we can look to? And then the last thing I would say is just increasing operational collaboration, amongst each other, across sector and globally.
Great, thank you. Jason, also touching on the point about the weakest link, your institution is a major part, financial market infrastructure, of the financial sector, and your counterparties are large, medium, small, and some of them might be weaker links. You're a major player, but how do you look at the resilience of the sector, and how do you look at the different bucketing there?
So I'll answer it this way. Part of the responsibility of all the financial market utilities is to absorb shock and to promote the safety and soundness of the financial markets. So as part of our daily operations as a market utility, that has been our main focus. So in order to baseline this conversation, one of the things that I think is just critical for us to understand is whether you're talking about cyber or whether you're talking about operational resiliency, our ultimate end goal here is to promote the safety and soundness of the markets and to limit consumer harm. So those are the two things that, no matter what we call this resiliency, that's what we're actually trying to accomplish. So some of the things that we're doing and have been doing, for the last 20, 25 years is not only around, the recovery and the resumption, but before you even get to the point where you find yourself having to recover or respond is what are all the other things you're doing to identify threats. So what are the threat actors? What are you doing to detect intrusions? What are you doing to protect yourselves? And then, when all of those things, fail, then how would you respond? How would you recover? And so what we're really doing is looking at how we would recover in different scenarios, and then identifying any countermeasures, if necessary, that we would have to put in place to actually address those things. Now, I'll say that one thing we do see is the increased market interconnectedness. And the great thing about market interconnectedness is it provides access to liquidity. It helps developing countries continue to strengthen their financial systems. But what it also does, in effect, is allow risks that happen across national borders to actually impact the sector. And so how do you deal with that? The second thing I think we see is the proliferation of the supply chain. So as firms start to outsource certain activities so they can focus on their core competencies, you see that the surface area for attacks actually increases. And so that can be used as a vector to actually impact the system. So we're also looking at how that could actually impact the financial services sector. And I say thirdly is the emerging technology. While the emerging technology has been great for some of the innovation, and we've talked about this in earlier panels around the innovation, one thing that you get also with innovation is new threat vectors. And I won't say so much that technology is a threat, but what I will say is the speed of technology and the way that technology can be deployed can increase the threat surface, because has there been standards that have been put in place for that new technology, and secondly is when people develop new technology, they're thinking of having that new technology be used in a certain way, but the challenge is that there's also someone on the other side of that trying to find ways to take advantage of that technology and use it in a way that you didn't anticipate, which causes the additional threats.
Yeah, great. Now, if I can return to the safety and soundness issue, for some regulators and supervisors, it's really important whether there is a financial stability impact. So if the payment system goes down for 2-3 hours, it might not have a financial stability impact. But you're obviously also very concerned about a consumer safety. And so let's say the payment system goes down, and then there are some consumers that can't pay their mortgages, or that were just about to buy a house, and then the money disappears. And for them, it would be a detrimental. So for them, it would be a material, obviously. So how do you, as a regulator, how do you sort of balance those different limits for tolerance when we're talking about, global measures, global standards for these sorts of things? How do you look at that balance?
Yeah, thank you for that question, Martin. I mean, obviously, from the FCA perspective, our objectives are, as I mentioned earlier, consumer protection, market integrity, and not financial stability, which is the objective of the bank. And that's why we work really closely with our fellow regulators on this point, because we've seen from a consumer protection perspective that pretty much every outage, every attack affects customers first, and we are first port of call. So it's really important for firms to think about what the impact of failure would be on their customers, on markets, and then plan accordingly. And it goes to the point I was saying earlier about business services. These are actually the business services to their customers. It's not an isolated system or process. So we have that consideration front and center in the way that we discharge our objectives.
Great, thank you.
And I would just add to that, I think that actually what Nausicaa was saying is core to the difference that we're seeing is instead of looking at, bringing a specific system online or set of systems online, it's how do we actually continuously serve the marketplace and the consumer with with financial services. So if you can do that without a system or set of systems in a manner that is, meets a minimum standard, then, that's something that is okay. But I think prior to this new way of looking at this problem, we were looking at it more of how fast can we bring a system up? At what point is the data? Is it today's data? Is it a month ago's data? So instead of looking at it in that light, taking more of a consumer view of this problem and how do we provide that service back out to the consumer. So I think that's something that was very consistent in the discussion paper.
Yeah, and if I can add to that, since we're going down this path, because I think that's very true. I think that has been a cultural mind shift in thinking about this. I mean, even Debbie, she mentioned the concept of substitutability. That doesn't mean someone who looks exactly like you, but what are all of these different alternatives to maintain the service and to keep it going? But part of the question is that at what level would it be acceptable, and what do we build to? Right. And then have, of course, then try to achieve something that would minimize any disruption, but there may be a baseline that everyone should look to invest toward and try to say, and here's maybe a minimum, and here are the substitutable, these options, and what do we sort of need to have as an individual firm, as a market, as a whole financial sector, as a globe. And that's really where I think a lot of this conversation is going. You're absolutely right, Jason. I think that's really changed the way people are starting to think.
And I would say a lot of the solution, you could look internally in the firm for substitutability options, but actually, I think some of the better solutions that have come out have been these sector-wide collaboration or cross-sector collaboration initiatives like the FSARC, initiatives like Sheltered Harbor, that have really been just good work across the industry.
Yeah. Beth, I was going to ask you, we've been talking about, the initiatives in the UK. Obviously, Hong Kong and Singapore have also come out with their own approaches. But you're also a member of the Basel Committee, which is also looking at operational resilience. And I was wondering if you could touch a bit on how that is going. I know that you've only started recently. How is that work going? What can we expect? And how does sort of this global approach fit into these, distinctive, issues that we've discussed?
Yeah, it is. The Basel Committee does have a group called the Operational Resilience Group, which sort of grew out of the retirement of the operational group that was working around the Capital Accord for operational risk. So it really has its roots there where, again, we were thinking about some sort of resiliency from let's hold enough capital, or how much capital do we have to hold for some of these things, more of a financial versus a service kind of perspective. While that work is still there and still part of the puzzle, don't get me wrong, it's still part of the puzzle, you still really need to do that. But out of that group then we've said, what is it now in this broader context of operational risk, recognizing through all that work that operational risk is more than you don't do that just to say how much capital do I need to hold in case I have a disruption. It's actually about managing these operations to be a company that does your operations correctly and continuously, and you can be resilient and work through these things. So we've continued the group on, and the very first thing we did was do a range of practice of what we saw for cyber resilience, both how our supervisors looking at it and how our firm's doing it. And we put out a white paper in December of this past year on this range of practices. And with that, it sort of set a stepping stone or a starting block with the concept of resilience built in, and now we've moved on to some broader work about operational resilience. As you said, we're only a few months firmly into this. What ultimately will come out, I can't anticipate. We are really just beginning. We're really having the discussions of defining it.
Yeah.
And you have pointed out a lot of the words, quite often we have used the same words, but they mean different things. We have the lexicons that are developing. Yeah. So how are we defining it? What do we mean by operational resilience? And you're getting the regulators around the world having this conversation together instead of, and they've all had their own conversations, but now we're bringing everybody to the same cocktail party to say, okay, what is it we all are really trying to achieve out of this? And let's start talking with each other. So maybe it doesn't go too far any one path, or we all can learn from each other, because it is the same issue we're all trying to achieve, we're all trying to look for. So we're looking to do that, find commonalities, look for things that we say, what is this new evolution from sort of probably a risk management principle kind of approach, and then what are tools and things that supervisors need to take into consideration as they look to what firms are doing or should be doing. Yeah.
We contributed to the Financial Stability Board's cyber lexicon, which you mentioned, which came out last year, about 40, 50 definitions. Do you see need for more of that? I know that US NIST also has definitions, CPMI, IOSCO has definitions, but do you feel like the terminology is still needing to be further refined?
Well, it's one of those things, and this is a personal opinion on lexicons and taxonomies. I think there's a lot of the concepts are the same. We just sometimes use different words and package it up slightly different, which can be frustrating and annoying when you have conversations, because there are nuances in every conversation. I think the work is good because we're starting to ground around where we do this often enough, and we will finally say, here's sort of the definition we finally have decided we think is the best of those that have been developed. But I think a lot of that work is probably settling down as we now move to, we're pretty close to what we think we can use as some of the most common terms and taxonomies, to where now let's move on to say, what do we need to do with this? Yeah. How do we really say, let's achieve these things that we now feel comfortable in defining? I think it'll be someone around the edge, but I think everybody really now wants to get to the real work and move it forward.
That's good. Jason, part of being a resilient is also knowing what's out there, and the perpetrators are often attacking many institutions at the same time. And so I was wondering, to what extent are you sharing information? Are you part of platforms like FSISAC? Where do you sort of see the opportunities for working with your peers, and where are sort of the obstacles, if there are any?
Well, I think that really there's 3 areas where I think we're really good at sharing information across. And, you know, we have information sharing forums such as FSART, FSISAC, which is the financial services sector information sharing center, where a lot of the financial firms can share information. You know, some of that information is threat information. So, you know, if one of us sees a threat that has occurred on our network, how do we share that back out to the broader industry so we have that strength in numbers? I think the second thing is more of like indicators. So what are things that we may see, whether it's geopolitical or otherwise, that may increase the threat or change the threat landscape? And then how do we share that information across? And then thirdly, I think best practices. So some of the things that we've done at DTCC is, you know, put out white papers, working together with the trade associations to put out white papers that progress the discussion. I think areas where it gets challenging, and you know, this is again tied into the interconnectedness of the markets and how then national issues could then impact other nations, is then how do you share information that may be sensitive for a particular segment of the market or particular sector within a specific nation that may impact another nation. So, you know, I think these are areas that we're still trying to figure out. But again, there's dialogue there, and we're working to decrease the operational friction of being able to share that type of information.
Yeah, so it quickly touches on national security issues possibly and things like that. Beth, there's also been a call by some members in industry that it's important to also work with other industries like the IT industry or the energy industry. What is some of your experience in how we can share information with the key industries together?
Yeah, we obviously think it's important because while we talk about the financial sector being interconnected, we're a hyper-connected world, let's be honest. We depend on a lot of different things to make all of these services really work. Part of the activity that we have been able to participate in is working with the other sectors, particularly with our sector agency through the U.S. Treasury, working with like energy and commerce to do some exercises. We did a tri-sector exercise where we had financial sector, the energy and telecom, and did a tabletop exercise with a simulation where we talked about where the impact to actually, you know, a physical site would have caused disruption, and it hit on all 3 of them, and the coordination that has to go on if one of those is really the victim, but how's it impact then the services they provide out broadly. Yeah. So they're continuing those works. I know that the ISACs do a lot of cross-sector conversations, which is very good, and we're continuing to work with some additional exercises and conversations to highlight how the financial sector depends on them, and how they at times really depend on the financial sector to move their stuff, to keep their capital flowing, to give them the services they need. So
yeah. And for those who may not know, what happens during a tabletop exercise?
A tabletop exercise is you're given a scenario. You get the brightest minds that they have. No, you get the right people in the right positions to sit around a table with a given scenario, and it states that you've had some sort of incident. And then what they put in is what they refer to as an inject, which they then say have events that occur during the scenario, and you walk through what actions do you need to take, how do you need to coordinate, how do you need to communicate with whom and how, who do you need to call in, and then you tend to walk away with gaps or actions that you know you need to do to make it a more fulsome, and then you need to exercise it routinely, really, on most of the things, so it can be reflexive. Yeah. So when the event does happen, there is at least some muscle memory baked into how you want to approach this, and to build the networks of the people you need to know, so you can make these very seamless, like you say, take operational friction out of being able to deal with the event.
One thing I want to mention on information sharing is I think that we're moving into an era of information sharing 2.0, right? So I think, before there was very little information sharing, and then what happened was we set up these ISACs, and I think, I don't know when the last time any of you have walked into a SOC, an operations center, but generally the SOC employees will say, well, there's too much information. Like, I don't even know what to do with all these indicators and warnings, and especially if you're not a very mature bank, I think a lot of the indicators and warnings that come out through the FSISAC email distro can be a little bit difficult to read and difficult to sort through. I don't know how to prioritize, like, what's the most important information, how is it relevant to me, what do I do with it? And I think the sector recognized that as a challenge, and I think one thing that we're trying to do is, I like the discussion around sharing best practices and the discussion around, the tabletop exercises. It's not so much information sharing; it's more operational collaboration. Let's actually work together and share information that way. So it's different types of information sharing that we're seeing now.
Yeah, I'd very much echo that. So in the UK, we have a CRISP platform, which is a confidential platform where firms and sort of security services can kind of share information about what is going on in kind of real time in the market. But then we've got other fora, such as we've put together cyber coordination groups, because the FCA regulates 58,000 firms across all sectors. And we wanted to be sure that actually different sectors could talk to each other about resilience, because obviously, depending on the business involved, the procedures are maybe different. And then the cross-border exercising as well. A few years we did a US-UK Resilient Shield exercise, which was very much about, well, we were all in London on video link with all our colleagues in the US on video link, and part of it was actually working out what each regulator does and who would you call in different scenarios with, as Beth said, different injects. So I think it's all really important that we continue on that vein, because after all, we're all in this together. We've all got the same sort of issues around cyber and operational resilience.
Where are the other sectors coming together? Because the Basel Committee is obviously banking, but then you have IAIS, you have the MIOSCO, CPMI OSCO, you have the G7, or the G20. Where do you sort of see the natural place for these issues to come together?
Well, there's certainly on a national basis, we do oversee quite a lot of that, being the regulator of a number of sectors. But I think that a lot of this know-how, even for FMI, so I co-chair the CPMI IOSCO working group on cyber resilience, and the principles that have been set out there are actually quite universal for other sectors as well. And I know that we've used those, the G7 have used those principles for its work and so forth. So I think it's important for all sectors to engage, but probably the principles around which they have to engage are not all that different. There's quite a lot of read across, I think.
Beth, we have a question from the audience, not to put you on the spot.
Always put the regulator on the spot. I know, I get it.
How have things been going with the recovery plans being submitted to the OCC by the GSIBs, and does the OCC collaborate with the FDIC on its resolution planning?
Wow, not directly in my wheelhouse, even though we did, my unit was the one that articulated the OCC's recovery planning rule. Our supervision units, I know that they're looking at them, and like I said, that is some of the information that underpins a lot of this conversation we're having today when you think about what it is about, it's targeted to, which is to recover. Unfortunately, I'm just not that deep enough into it. From the resolution side, it's they will be the ones that will take it into conservatorship. We just the ones that determine whether it needs to go there or not. So, but unfortunately, I'm just not that deep into that part of the.
Well, a different question is about the cloud service providers, right? So the cloud service providers would probably, in a resolution framework, fit under the critical functions, and in your jurisdictions, you already have oversight over critical functions. But to what extent, and maybe for all of you, to what extent are the CSPs, the fact that there's really only 2 or 3 major ones being used by the banks, and to what extent do the CSPs add to your concerns or your focus about operational resilience? Maybe I can ask you first, Nassika,
Yeah,
how you see that.
Yeah, absolutely. So that is an area that, as regulators, we are looking at. The Financial Policy Committee in the UK is sort of monitoring that. At the moment, we're not regarding it as a sort of financial stability risk, but it is something to continue to monitor and talk about, actually, with our international counterparts as well. But a couple of observations I would make is that obviously with cloud service providers, from a regulatory perspective, we regard outsourcing to the cloud just as we do any other outsourcing, and we issued some guidance on that in the UK in 2016. I think the key thing, though, is that firms need to understand that they are responsible overall for their resilience and their function. But then in terms of the cloud service provider, there are different kinds of services. I think everybody thinks, oh, well, it's the cloud, but it's not just one thing. And very often the staff in a firm actually have to perform different functions to those that they did before. And the firm needs to have be sure that it is operating in a secure way in the cloud, and that's its responsibility. So I think there's something there about for a firm to be clear about what exactly its responsibilities are, what might be shared, and so forth, to ensure that they remain resilient and secure.
Yeah, one note on the cloud, and I think, as a sector, we're getting together to figure out what are good best practices around the cloud, because certainly the concentration of risks can be a daunting problem, especially since there are so few cloud providers out there. But just like with any technology, right, you can use it responsibly or irresponsibly. And I think for the sector, there are different options, right? Like when you don't have to put your most critical data in the cloud, right? You're still keeping your crown jewels protected. You can tier and prioritize your data. You can create other resilient type. So again, going back to substitutability, you don't have to put all of your data in one cloud. Perhaps you could split it up among 3 or 4 different providers, and yeah, I think cloud for us offers a more efficient way to secure some of our services, and it's meant to be an enabler. It's not meant to be the scary thing.
Absolutely.
Yeah, it was also built for the digital age, where some of the legacy computing wasn't, and so there are arguments sometimes that it's there's more of a risk not going on the cloud and and there's going on the cloud. How do you see that, Jason? Do you see the cloud as a major issue?
Well, so I think that any new technology implemented poorly is going to cause you nothing but headaches and havoc. But I think that using cloud in a smart way, and again, there's many strategies to do that. You don't have to put all of your necessarily core critical infrastructure into the cloud. There's ways you can phase that in, understand and get a better feel for the technology before you start looking at increasing your commitment to it. I think that the cloud is definitely something that firms and FMIs have been looking at from a concentration risk. I think we've been partnering very well with the supervisors as it relates to what type of impacts that could occur to the financial safety and soundness in the event of a major cloud provider not being able to provide that service. So again, I think that dialogue is strong and continues to evolve. And I think it's a space that we need to continue to watch as more firms get more comfortable with putting information into the cloud. But I think I think it's fluid right now.
Just one last thing to add
please,
to this whole conversation, because you're right. As a supervisor, we're looking at all service providers and we look at banks and how they use their outsourcing and how they use service providers. And this is one more to Nassika's point of we expect them to manage this and understand the relationship. But the point I wanted to make was sort of to the innovation and the new technologies and new players in the game. and to the fourth and fifth party risk, because quite often that's also what we're seeing an awful lot in the back end of the financial services sector. It may be not so blatantly that first relationship, but it's going to be the back end of the new partner that they have for their mobile app or for this payments or for something else. And it's really now the fourth party or the fifth party, and it's still in those service providers, and how it can still, cascade back up to you, even though it's not that direct relationship. Yeah. That's why it's important for firms to understand how their service providers may be using other service providers and how they manage their relationships and resilience. So it's one of those cascaders.
Know your vendor's vendor.
Yep.
Yeah. We saw in a recent EBA report, Debbie, that in all EU member states there are different rules about using the cloud. So when it comes to regulatory fragmentation around cyber, we do see that for internationally active firms that are working in many countries, that the rules can be very different. And so I was wondering how tools like the Financial Services Profile and initiatives like that help firms that are globally active in trying to meet all these different demands that you're seeing.
Yeah, thank you for that. So this is the operational resilience, cyber resilience is a global problem, right? And if we're using different vocabulary, different taxonomies, different ways of looking at risk, different measuring sticks, it's very difficult for both public and private sector to work together to come to a common solution to address this global problem. So one thing that industry has done, and I would caveat this by saying that it is a first step on a long road towards more regulatory harmonization, is a product that we call the Financial Sector Profile. And what the profile seeks to do is it's actually based on the NIST cybersecurity framework, so identify, protect, detect, respond, recover. And we also added 2 additional categories, governance and third-party oversight. And so the profile basically, we looked at 60 regulations, and we're in the middle of trying to incorporate more global regulations, but we looked at 60 regulations, best practices around the world, including CPMI IOSCO, the G7 principles, Monetary Authority of Singapore regulations, Bank of England, and we mapped them to these 7 functions, and we said, okay, well, let's come up with common diagnostic statements, basically a list of best practices for identify, best practices for detect, protect, respond, recover, governance, third party. And let's make this a common framework. And it's not meant to be a supervisory tool. It's not meant to be a substitute for supervision. But what it does do is say, okay, if we want to do certain things around identify, this is the common question, and for firms, we can provide evidence very quickly to common questions to regulators around the world. So it's almost like a translation type tool. So as I said, it's the first step. There's a long way to go for this product to increase harmonization.
And I'll just add to that. I think that it's pretty common knowledge that there's a shortage of cybersecurity talent out there. And I think that it's estimated we have like 1.6 or 1.8 million jobs that for cybersecurity specialists that we don't have individuals for. So being able to increase the time that individuals are using to actually implement the services needed to protect and respond to cyber attacks, if we can use that time and energy and focus in that area, and less so trying to address all the different nuances of a particular rule by saying, giving a very comprehensive way of saying, this is what we're actually doing, this is why we're doing it, this is what our environment looks like, which drives why we're doing it in a specific manner. I think that is a win for the sector, because now we're focusing on this threat that everybody has identified as being significant.
And I think for regulators, it allows regulators to look at banks equally, right? Because they're all answering the same question, and you can better benchmark and compare and contrast.
Yeah.
And this is something that we are looking at in global bodies at the moment, in standard-setting bodies, so IOSCO and FSB and so forth. So, yeah, and that your work's very helpful on that.
Thank you.
Yeah.
Well, we're almost running out of time, but I just wanted to ask also Anouska and Beth on the talent issue. So central banks, regulators are full of experts who are experienced on capital, liquidity, leverage, but we have all these new vulnerabilities now, including cyber and climate and cloud, and sort of how are you staying fresh on those things, and how are you retaining the right people? How are you retooling your staff?
I think it's a really good question, and then good one that Jason raised too. Yeah, for us and for the industry as well, we're looking at two different things. One is obviously bringing in experienced talent, but obviously also growing talent. And in the UK, there's a professional body for cyber specialists and technology specialists. So we're really building on that.
Yeah, and we're doing the same thing, but we're also trying to get all of our examiners somewhat proficient in talking about this, because all those other risk stripes you just talked about, what are they using? They're using the technology that to do those activities that this is directly, what we're talking about needs to be resilient. So we're doing both of those.
Great. Well, thank you very much. Our time is up, so please join me in thanking our panelists.
Thank you.